right to today's market action. Ken Mahoney, Mahoney Asset Management, here to tell us why the U.S. is the best place to invest right now. Joe Franklin, Franklin Wealth Management, here to tell you which opportunities he finds, but where, the U.S. or overseas. And Anthony Crudele is joining us live from the CME. Anthony, I'll start with you. You had bonds defying data. We had good data this morning from first-time jobless claims, but what drove such a strong rally, I guess you could say?
Well, let's begin with that, with the bonds. We've been seeing this a lot lately. You know, the 10-year and 30-year bonds, we've been getting bad data or soft data, and then we start to see them rally, and then they come right off. Woke up this morning, and I saw that the 10s and the 30-year bonds were not going any lower. We stopped seeing, you know, that selling pressure. They were up a little bit. And when you look across the board, you say, okay, since that's not happening, they come in and they buy stocks. But I want to take this a little further. I want to talk about the dollar, because I think that not only with the 10-year and the 30-year bonds selling off lately, I think that's been a concern. But you notice how the dollar has not been rallying, which I think is one of those things that doesn't really make sense, right? So going forward, I'm going to continue to watch the 10-year and 30-year. And if they start to sell off, if they continue their sell-off, if they continue to react the way that they have been to bad data, and we start to see that dollar rally, then I think that this rally in the S&P or this rally in the stock market could be short-lived.
All right, Anthony, we let you go on because nobody says bonds the way you do. We love your Chicago accent. We're going to get back to you in a second. But, Ken, I want to get to you and ask whether the market is getting a little ahead of the economy right here. We're having weaknesses in the economy. Of course, that might be good for rates. The Fed might delay raising rates. But is the market ahead of the economy here, Ken?
I don't think so. And one thing we've been watching very closely, as you mentioned, is the volatility coming down. Now, for some traders, they don't like this low volatility. You really can't make much, you know, with this low volatility. But, you know, we've been talking about buying the dip and selling the rip now for the last couple of years. And the question is, how do you time it? Now, the way we time it is we look at the volatility index and say, you know what? You know, if the volatility index spikes and there's some fear, you know, we'll take some chips off the table. We'll recognize that it's kind of you know, risk off again. But for now, the low volatility is really helping stocks. So we're just going to stay long. We recognize, you know, the economy is going through a whole bunch of different changes. But underneath it, we see constructive. We see the advanced decline line strong, and we really like the low volatility in markets. See what they did today. S&P 500.
And we can't stress enough, another record high for the S&P 500. That brings me to Joe. Where are you bullish? Where are you bearish?
Yeah, even with the stock market hitting all-time highs in the S&P 500, we still feel like this is a stock picker's market. But we're particularly bullish overseas, particularly in Europe. And the European Central Bank and the Bank of Japan have both been buying hundreds of billions of dollars worth of bonds over the every quarter over the last couple of years, and they're continuing to do that. Mario Draghi spoke in Washington earlier today, and he committed to $1.2 trillion worth of stimulus. And with that and with the valuations as low as they are versus the U.S., over the last 30 years, the valuations here in the U.S. are the highest they've ever been versus Europe. Europe is cheaper than it has been since the 80s.
Okay.
And so we really feel like there's a big opportunity there.
Anthony, we mentioned the volume was a little low today, but we did see this major drop in the VIX. It was down about 7%. Is the market on target with that? Are we expecting this low volatility for a while here?
Well, this is a continued theme. You know, there's been lower volume on highs, but I'm one of those people that I'm not in the camp that lower volume doesn't mean that we can't go higher. I just think that because we saw, I really go back to the fear factor, right? So you're talking about the VIX. And I think the VIX rallies when there's uncertainty and when you see 10s and 30-year bonds sell off the way they have been. And when you see that type of action, I think that drives the VIX up because people get nervous. What's been the number one concern we've had? Okay, if rates go up too fast. But when that starts to simmer, then I think that, like I said, when you come in this morning and you see that bond stop selling off, then they come in and they buy the S&P.
Ken, we had a trader in the last hour say, whatever you do, do not short this market right now. It just might catch you flat-footed. I'm guessing you feel the same way, and if so, what do you buy?
Yeah, remember that's always the old Wall Street saying, don't short a dull market. And this is kind of a dull market. Let's be real. You know, one thing I do notice with this market now, we are making fresh highs, the S&P 500, but you know, we also have a way of having amnesia, right? I mean, one day we're up 250 points and you're hoping for a follow through, and the next day we kind of even forget about it. And that's true to the downside also. You know, if you're a little bit concerned about the market but you want to stay long, maybe get a little bit more defensive. I mean, one area we do like is healthcare, and the reason why we like healthcare is there's a lot of consolidation. I mean, you have to get big to have earnings in healthcare space. You have to have economies of scale, and then you're going to see consolidation. So if you want to stay in this market, you come down beta a little bit, you know, take some of the volatility at some of your positions, and that's a place that we kind of like to kind of stay long, but a little bit less beta.
All right, Ken Mahoney, good stuff. Thank you very much. Joe Franklin, Anthony Crudele, good to see you all. Thank you.
Thank you.
Thank you.
While at the same time acknowledging